The bear market is here, and it has been crushing many of our favorite stocks. Today, we have 8 stocks that have used some very colorful metaphors to tell the bear market where it can go. While the bears cower and fare at these stocks, we will begin right now. My investment strategy loves the bear market, as this is the time when real wealth is made. However, it is still nice to see a few green stocks, even if it is just for the psychological boost. For this group of stocks, I searched high and low on both sides of the border. I ignored any stocks less than $1, and they needed to have a positive 90-day growth. You know that saying, the proof is in the pudding. Before I drop these bear market rebels on you, I want to welcome the brand spanking new people to the channel. Be sure to subscribe for lots of free, well-rounded financial content. Also, comment below and let me know you are a new sub so I can personally welcome you to this fantastic community. We have found 4 companies in Canada and 4 companies in the US who have totally told the bear market to go pound some sand. All of these companies have a positive earnings per share as well as decent price to earnings ratios, so we're not going to talk about them in this video. So, without any further ado, let's take a look at the first of the American stocks. For our first American pick, we have Clearfield Inc. with a ticker of CLFD. They are a technology company based out of Minnesota. They design, manufacture, and distribute fiber protection, delivery, and management solutions. They do provide their service on a global scale, which in part may be why they are doing so well in the bear market. They have a market cap of $1.04 billion and a beta of 1.12, so they are average in regards to volatility. Of course, we are here for the returns. Over the last 3 months, their share price rose from $58.18 to $75.43 for a return on investment of 29.65%. This is also their total return, as they do not have dividends. Fiber is the future of the internet, metaverse, and of course the overall server operations. I can easily see why this company has done well and should hopefully continue on this track. For our first Canadian pick, we have Winpak Ltd. with a ticker of WPK. They are a packaging company based out of Winnipeg. They produce packaging products for perishable food, beverages, and of course healthcare products. Winpak has a market cap of $2.90 billion and a beta of 0.05, so they are not very familiar with the word volatility. Over the last 3 months, their share price rose from $39.50 to $44.69 for a return on investment of 13.14%. They are also a non-dividend company, so this would also be their total return. This is a company who produces a product that will always be in demand, which is, well, that's the definition of recession-proof, and thus, this makes Winpak a pretty good investment. For our next American pick, we have H&R Block with a ticker of HRB. They are a tax preparation service based out of Kansas City that provides income tax solutions to their customers. In addition to this, they also have a good flow of revenue from franchise and product royalties. H&R Block has a market cap of $5.97 billion and a beta of 0.66, which makes them significantly less volatile than the market average. Over the last 3 months, their share price rose from $26.77 to $37.41 for a return on investment of 39.75%. Their yield is 2.887%, which is paid out quarterly in the amount of 27 cents USD per share. This makes their total return 42.64%. With H&R Block, they are coming out of tax season, so this ROI will 100% drop. They do have royalties, late taxes, and the like. However, this is a company that may still stick it to the bear market. For our next Canadian pick, we have Capital Power Corp with a ticker of CDPX. They are a power producer based out of Edmonton that owns and operates a wide selection of assets, including natural gas, coal, wind, solar, and solid fuel generating power stations. Capital Power has a market cap of $5.4 billion and a beta of 0.62, which also makes them significantly less volatile than the market average. Over the last 3 months, their share price rose from $41.89 to $46.34 for a return on investment of 10.62%. They are also a dividend payer. Their yield is 4.726%. That is paid out quarterly in the amount of 54.7 cents Canadian per share. This makes their total return 15.35%. Energy generation is very recession-proof as we will still need power, and then of course heat in the winter. Capital Power uses energy and is certainly affected by the oil prices to some degree. However, their demand is not going away, and this makes them a very safe choice. For our next American pick, we have a fun one with Funco, who has a ticker of FNKO. I am sure you've all heard of Funco, as they have turned pop culture into their business with Funko Pops and a slew of licensed products. I am willing to bet that at least half of you have a Funko Pop. Which one is your favorite? Let me know below. Funko has a market cap of $1.09 billion and a beta of 1.92, which is a little high, so expect some volatility with this one. Over the last 3 months, their share price rose from $16.67 to $23.47 for a return on investment of 40.79%. That is also our total, as Funko brings the fun, but not the divs. Funko Pops are, well, they're affordable, and with the collectible aspect they also have, it makes them a safer bet when times are a little more difficult. This is a company that will more than likely defy the bear market and maybe even turn it into a Funko Pop. For our next Canadian pick, we have Richie Bros Auctioneers Incorporated with a ticker of RBA. Based out of Burnaby, BC, they are the #1 marketplace in the world for heavy equipment. They sell the big gear for construction, agriculture, oil fields, and transportation. Holy banana bread. This is a company that may actually be too big to fail. Richie Bros has a market cap of $9.79 billion and a beta of 1, which also makes them, well, exactly as volatile as the market average. Over the last 3 months, their share price rose from $70.15 to $88.29 for a return on investment of 25.86%. They also have dividends. Their yield is 1.463% that is paid out quarterly in the amount of 25 cents USD per share. Keep in mind, there will be a currency conversion with this one. This makes their total return 27.32%. Big industry will always need big gear, and this will be big for Richie Bros. For our #1 American pick, we have ProPhase Labs with a ticker of PRPH. They are a company based out of Pennsylvania that provides diagnostic as well as testing services. In addition, they are involved in the research, development, manufacturing, distribution, sales, and marketing of healthcare products, as well as dietary supplements. ProPhase has a market cap of $219.28 million and a beta of -0.27, which is interesting. A negative beta is something we haven't seen before on this channel. What it basically indicates is that this is a stock that tends to do better when the market is down. Over the last 3 months, their share price rose from $8.25 to $13.98 for a return on investment of 69.45%. Very nice indeed, and also the biggest ROI you're going to see on the chart today. They have no dividends, so this is also their total return. ProPhase has a history of doing better when the market is in the red, so it goes without saying, this is a stock that may be a very nice one to ride through the current bear market. For our #1 Canadian pick, we have Olympia Financial Group with a ticker of OLY. Based out of Calgary, they are a huge provider of private health and dental plans. In addition to this, they also buy and sell foreign currencies. Olympia Financial has a market cap of $154.01 million and a beta of 0.55, which makes them about half as volatile as the market average. Over the last 3 months, their share price rose from $51.53 to $64 for a return on investment of 24.20%. Now, in addition to that, they also have a nice dividend yield of 5.062% that is paid out monthly in the amount of 27 cents Canadian per share. This makes their total return 29.26%. That is not too shabby. They do have some nice numbers, but this is one I would be a little cautious with because when you dive deeper, they have a very small trading volume. And that is always an alarm bell for me. They may be tops on the criteria for today's list, but out of all 8 stocks, they are the only one that I would be nervous about investing in. I like to check my emotions at the door when I invest, but that one exception is when a stock makes my gut feel a little bit on the nervous side. This stock does that. So for me, it is a pass. You should check out my video on the VIX, or you can try the video YouTube thinks you'll like. Your click will decide who's right, and I'll see you in the next video.